Hello everyone, welcome to Currency Monthly Podcast. This is Saif Mukadam, Research Analyst for Commodity and Currency. Let's discuss on currency outlook for the month of June 2023. Now let's see what happened in dollar. The dollar paused and rose back towards the 104 mark, aimed safe haven buying and better economic numbers from the US. The ongoing US debt ceiling issue raised concerns on US default, leading to a rise in dollar. Further, better than expected US economic number and hawkish comments from Fed members also supported the gain in dollar. We expect dollar to face a hurdle near 105 level in anticipation that US Fed may hit the pause button in its upcoming policy meeting. As per CME Fed Watch tool, markets are pricing in 63% chance of Fed foregoing a hike in the June meeting. Further, forecast for upcoming economic data from US seems to signal that economy is feeling the heat of the rate hike. Additionally, investors fear that the debt deal will intensify the risk of recession while limiting government spending, which could make the Fed less likely to keep tightening. Now let's talk about rupee. Rupee depreciated back towards 83 marking strong dollar. Concerns over economic slowdown across the globe and uncertainty over the US debt ceiling impacted the rupee. Additionally, solid economic data from US and hawkish comments from Fed officials fueled bets that interest rates may remain elevated for longer than expected. However, strong FI inflows in the domestic equity markets and weakness in crude oil prices limited the sharp fall in the rupee. Rupee is likely to trade in the range of 81.80 to 83 levels in the coming month. In the past 6 months, the USD/INR has failed to breach 83 level, which is now acting as a strong hurdle. We expect rupee to appreciate this month in anticipation of a correction in dollar and improved economic data from the country. GDP grew 6.1% in quarter 4 FY23, pushing the overall growth rate to 7.2% for FY23 despite global headwinds. Indian equities have seen continued inflows in the last 1 month, and further trajectory of flows will be crucial to watch. However, softening crude oil prices may be supportive for the domestic currency as it will reduce import bills. Moreover, India's CPI data is likely to show that inflation remains under RBI's comfort zone, providing room for the central bank to keep borrowing costs low and focus more on economic growth. In the past few months, the rupee has remained in the range of 81.60 to 83 levels. In the coming month, 83 would act as a major resistance while the pair is expected to dip towards 81.80. Now let's see what happened with euro. Euro retreated from its one-year high and lost more than 2% last month, amid strong dollar and weaker economic numbers from eurozone. The contraction in the German economy, which reported a negative growth in the first quarter of 2023, has raised recession fears. Furthermore, weakness in manufacturing sector also weighed on the single currency to slide below the 1.08 mark. Euro is likely to find a floor, aim expectation of correction in the US dollar. Further, ECB is likely to opt for a 25 basis rate hike as headline inflation rate remained far above the 2% target. The policy divergence between the US and Europe could support the pair to erase its last month losses. However, investors will remain cautious ahead of the guidance from the central bank to get cues on future rate hike trajectory. Euro USD is expected to hold the support near 1.06 and rebound towards 1.0850. Euro INR is likely to find the floor near 87.50 and may rise towards 89.40. Now let's see how pound performed. The pound paused after testing its one-year high near 1.2679 due to strong dollar. Further weakness in job numbers and decline in GDP data also weighed on the pair. Meanwhile, hawkish comments from BOE officials aim high inflation number has restricted a decline and helped it to rise back above the 1.24 mark. Furthermore, improvement in last month's retail sales number also supported the recovery in the pair. The pound is expected to trade with a positive bias in expectation of correction in the dollar and in anticipation that BOE may continue to raise interest rates by 25 basis points to control stubbornly high inflation. GBP USD is trading above bullish crossover key moving averages of 50-day EMA and 200-day EMA, which could help it to rise again towards 1.26. On the downside, 1.23 may hold as a key support to the trend. GBP INR is expected to hold the support near 101 and rise towards the target at 103 to 103.50 zone. Thank you. Have a nice day.